Hi student, Assalamualaikum warahmatullahi wabarakatuh and hello to all. For 8 weeks from today until early of October, we have to learn to live in new norm post-COVID-19, which the online learning has been implemented to ensure smooth process of teaching and learning. For that, all lecturers has tried their best to ensure all material has been delivered to the student. So please give us your fully cooperation to make this process go smoothly. We wish all of you a very good luck and see you in coming October. Hi everybody, welcome to part 3. So you already half there, so let's continue. Okay, in part 3, we are going to look at the second situation where changes in partnership happen. When something happen in partnership, whether there is a additional member or some partnership is get out from the partnership, the changes will be effect as follow. First, the capital contribution and changes in the percentage of interest on capital. There will be a changes also on profit sharing ratio, and there may be a changes in salary part. So let's have a look at this example. Right, so this is a year assessment 2019 for 12 months, 1st January until 31st December 2019. What are the who are the member, who are the partner is ABC, AB and ABD. What happened there is on 1st January 2019 until to the 31st March 2019, ABC is a partnership. But on 31st March 2019, C has retirement, yeah. Okay, C are going to retire. So let me do some. C already retired on the 31st March 2019, and then they already have a changes in the partnership from 1st April until 30th June 2019, when there is only A and B as a partner. So I do believe that there is some changes in this part. Okay, in this part, there would be a changes in the capital contribution, and IOC part, there would be a new agreement on sharing of profit sharing ratio, and there might be a changes in the salary. Okay, so what happened from 1st July 2019 until 31st December 2019? They had been invited D as their new partners, right? So it goes the same. There would be a changes when they get into the partnership. There might be a new agreement on the capital contribution and IOC, interest on capital percentage. There also will be a changes in sharing profit and loss ratio, and there will be a changes in the salary part too. Okay, so what happened there? What happened when a new partner get into the partnership or someone get outside from the partnership? There might be a new agreement. So can you tell me how many profit sharing ratio has been changes? If your answer is 3 times of profit sharing ratio changes, then you are correct, because this is the original one. Okay, and then C retired, changes already. Okay, and then when D get into the partnership. Okay, so the changes would be here 1. The changes might be here 2. The changes would be here 3. Okay, 3 changes. Okay, so I do hope that you understand this part because we are going to do some exercises later. Alright, when there is a changes in the partnership, what happen is there might be new rules for capital allowance. Okay, so let's read here. The capital allowance is allocated concerning the PSR of the partner at the end of each basis period. New partner admitted they would enjoy full year capital allowance for those retired partner or person who get out from the partnership before the end of year would not get any capital allowance in the year of withdrawal. The rule is capital allowance is allocated to existing partner at the end of the basis period. So do you still remember as the previous slide? So there are A, B, C and D as a partner. So C already retired on March 2019 and D get into the partnership from 1st July, is it? Until the end of year. So who are the partnership? Who are the partners? Who are the one who will get the capital allowance? If your answer is A, you are correct because A is still in the partnership at the end of year. If your answer is B, then you are correct also. And if your answer is D, you are correct also because A, B and D is the only person who being in the partnership at the end of the year. Okay, so you should remember the capital allowance will be enjoyed to the partner who's still in the partnership at the end of the year assessment and are using a current profit sharing ratio. The current profit sharing ratio. Okay, right. So this is about capital allowance allocation. Okay, so let's have a look at the example 1.6 regarding to the changes in partnership. Hi students, so let's have a look at the example 1.6 regarding to the changes in the partnership. Okay, so a partnership of Persona and Almera made up its annual account to 31st December each year. On 1st April 2019, they have invited Izora to join the partnership. Okay, so it's already stated that there is some changes in the business in the Parallax enterprise because they has invited Izora to join the partnership. So this is why we treat this question as a changes in the partnership. Okay, because somebody enter the partnership. Okay, so this is the Sochi given to you. So you need to identify which one is non-allowable expenses and AE, which one is other income, and which one is partner income or partner expenses. Okay, so here on your left is about administration expenses. So there are no other information. So let's have a look at whether they have information in the additional information. So there are no additional information stated unless they are giving you the profit sharing ratio table. The notes to repair about repair expenses, which is including the extension. Any extension, if you can still remember last semester when you are doing business taxation, that any expenses regarding to extension to the building is not allowable. However, when the repair, when the building has been repaired or maintained, the cost is allowable. Okay, the third additional information will be given to you is about capital allowance. Alright. So here the administration expenses is allowable. The salary of employees. Okay, employees means the worker to the parallax enterprise, so this is also allowable. However, in the repair part, there are some additional information down there stated that there are a certain amount that has been used as extension to the building. Okay, so how much is the NAE? Okay, the NAE is 32,000. Okay, so you must put it some notes here. Okay, some notes here so you can remember. You can remember that that repair is non-allowable. Okay, how much is it? You stated there as like this. RM2,000. Okay, as in additional information. Alright. So, next, depreciation. Okay, depreciation is not allowable as expenses because in taxation computation, we are given them a capital allowance, not a depreciation. Okay, so depreciation is non-allowable expenses also. So I'm going to put here some remarks so you can remember that. Okay, so this is a gross profit 6,000. Okay, gross profit 6,000, and then on your right there are information regarding about the income. Okay, so the trading income is allowable because it is a trading account, a business account, kan? So this is allowable. Okay, however, there are some information about other income here. Okay, right. So let's have a look whether there are some information regarding to the other income. Okay, so there are no other information about other income, so we didn't know whether the other income is belong to the partners or not. However, the other income for these purposes, since there are no remarks on that, so we are going to deduct back. Okay, right. So you can put some remark here also in the other income. Deduct back. Okay. Alright, so let's move to the left side about partner salary. So this is what income to the partner. Income to the partner but expenses to the parallax. Okay, so this is about the PPE for each partner lah. Okay, so this is for persona salary, for Almira salary and Izora salary. Meanwhile, under here is about interest on capital for persona, for Almira and Izora. Okay. Alright, so that's the only information about the partners. Okay, so now we are going to the additional information. So this is the PSR given to you. So as you can see, it has two agreement, 1 and 2. So that means there are some changes regarding to the partnership year. Okay, alright, so let's move to the Excel part, which is you have to put out all the important event regarding to the partnership. Okay, first you are going to okay, you are going to determine the working period for each partner in current year because we want to know how many months that Izora work, Almira work or Persona work. Okay, number 2, you have to determine the PSR for each partner. Okay, so as you can see, there are already a table to in the question, so you are going to put back in the working side. Okay, step 2. You have to compute the provisional adjusted income, divisible income, and then statutory income for each partner. Step 3, you have to allocate any donation or capital allowance. In the question given to you, there are no information regarding to any donation. However, there are the notes about capital allowance, right? Okay, so let's answer all these step 1, step 2, and step 3. I'm going to put out like this. Okay, so you have to identify the working period for each partner. Okay, so from 1st March 2019 until 31st March 2019, before Izora entered to the partnership, Persona and Almira has been working for 3 months in 2019. Okay, alright, so next, this is a new part which is there are changes from 1st April until 31st December, which means 9 months, alright? So we are going to put Persona another additional 9 months, Almira another 9 months, and Izora for 9 months. However, in the Izora part here, non-applicable because she did not exist yet. She did not enter yet to the partnership. Okay. Alright, so let's move to the PSR part. Okay, you just copy everything from here, put here. Okay, put here. Here, put here. Alright, okay, just copy it back. Alright, so 2/3, 1/3, non-allowable, non-applicable, 3/6, 2/6, and 1/6. Okay. Okay, so let's move to the computation of adjusted income, divisible income for each partner, which is we are going to find out the pi and divisible income. Okay, so the first line that you should find is about net income or net losses. Okay, in Sochi, is already stated here that the parallax is on net loss. Okay, net loss. So we are going to put it here. Okay, put it here, net loss. Okay. Alright, it's too long. The arrow is too long. I'm going to undo it back. Okay. So the net loss here. Right, so we are going to put it the amount there. Okay, and then we are going to add back anything regarding to the partner salary. Okay, so there are 3 partners: Persona, Almira, and Izora. Okay, where did I get it? The 11,000, 15,200, and 44,800. I just take it from here. Okay, I take it from here and I copy everything here. What you should do is you should total the amount. Okay, because we are going to use the total of amount in the DI part. Okay, divisible income part. Alright, so I'm going to undo back. Okay, so how about the partner interest on capital? It is the same as what we have in the question. Okay, we just copied everything here. Okay, so let's have a look. Persona 1,800, Almira 1,100. And Izora 500 ringgit. So as I told you, you should do the total of expenses. Okay. Alright. So next, what's next? Okay, we already settled the part of partners. So there are two information that related to non-allowable expenses. So we are going to put it under the other income, the other expenses part. Okay. So we are going to add back the extension store. Okay. Alright. So we are going to put back the extension store information, which is stated down here. Extension of existing store is not allowable, kan? Okay, so we put the amount here. Okay, 32,000. Next is about depreciation. Okay, let's have a look the amount of depreciation here. Okay, so we have copied that here, 20,000. Alright, so on your left, all information regarding the expenses, non-allowable, the partner's expenses, the partner income, which the partnership provided given to them is already complete. However, there are one information regarding to the other income here. Okay, other income. So you should deduct here. Okay, 10,000 ringgit. So we already computed and we get the amount of provisional income is 58,000. Okay, 58,000. Okay, 58,000. So let me give some color in that. Okay, 58,000. So this is the amount of PAI. After we get the PAI, we are going to deduct back everything that regarding to the partners. Okay. Alright. So, like this. Okay. Partner salary. Okay, here. Okay. 31,000 and the IOC, interest on capital amount. Okay, so we are going to calculate back 58,000 minus 31,000 minus 3,400 ringgit. So we are going to have 23,600 ringgit as divisible income, SDI. Okay, so start from now, you have to do a working calculation sheet. So you will be safe from any mistake, hopefully. So this is how the working calculation sheet look like. Okay, so what we should do is we should put the amount of divisible income. So you won't forget. You won't be there will be no mistake at all. Okay, here. Right. So we are going to divide the 23,600 ringgit to each partner by using their PSR, profit sharing ratio. Okay. So this is how it's look like. So you should you already find out the date. You already find out the date here. Okay, the date and the event, the changes and no changes month. Okay, so we are going to calculate the Persona, Almera and Izora divisible income parts. Okay, so for the first part, when there are no changes, okay, 2/3 here. 2/3 means this is the PSR part. Okay, meanwhile, the 3/12, okay, the 3/12 is the month. Okay, the month part. Okay, 3/6 here. 3/12. So this is 3 months. This is 9 months. Accumulate them is 12 months. 1 year, complete 1 year. But in the no changes part, they are only affected for 3 months only. So 3 over 12 times divisible income 23,600. Okay, you will get 3933. Okay, same with Almera. 1/3 is a profit sharing ratio. 3 over 12 is month that are related to times divisible income. So you will get 1,967 ringgit. While Izora, non-applicable because she not enter the partnership yet. Okay. So let's have a look at the second part. Okay. Alright, class. So, this is 3 over 6 is a new PSR for Persona after Izora entered the partnership. Meanwhile, 9 over 12 is regarding to the month here. Okay, times DI. So you will get 8850. It is the same with Almera. 2 over 6 is the PSR given. 9 over 12 is the month related to the year and divisible income. Okay, times divisible income. So this is the amount of DI for the second part. And Izora, this is what profit sharing ratio look like for Izora, 1 over 6. 9 over 12 is for what how many months she with the Parallax Enterprise, and times with DI. So the amount is 2,950 ringgit. So we are going to add up both DI for each partner. Okay, so the amount of divisible income for each partner is as below. Persona is 12,783 ringgit. Meanwhile, Almera 7,867 ringgit. And Izora 2,950 ringgit. Okay. Right. So, if you want to make sure whether your answer is correct or not, you should total up the DI part. Okay, so you should total up the DI part here. The DI part, let me... Okay, you are going to deduct this and you will get this one. Okay, same as what the answer, the calculation given you as above lah. As above. Okay, so we already get the total allocation divisible income to each partner. So let's have a look on how the capital allowance 12,000 can be allocated. So if you can still remember that capital allowance will be only given to those who still in the partnership at the end of the year. So when we are looking at this part, it already stated that in the second part until the 31st December, so there are Persona, Almera and Izora. So everyone will get the allocation for capital allowance. So this is the information regarding the capital allowance information. So this is how we are going to calculate it, yeah? Okay. 3 over 6 is the new profit sharing ratio for Almera times 12,000. 2 over 6 is also the new PSR for Almera. 1 over 6 is profit sharing ratio for Izora. So this is the amount of capital allowance. Okay, student. So we are at the end of the calculation. So this is the time we are going to compute the statutory income for each partner. Okay, class. So we are going to put the all information regarding to each partner to their income. Okay. So we are going to put back anything regarding to them, which is it's stated here about the salary for Persona, Almera and Izora, okay? So we just copied it back there. 11,000, 15,200 for Almera and Izora 4,800. Meanwhile, the interest on capital down here, so we are going to put here. Alright? We just copied it back. Whatever does have in the Sochi, you just copied it back. Okay. So that's the amount of interest on capital for each partner. Okay, so now it's about divisible income amount. Okay, so we already calculated it up here. So you just copy it down here. Okay, copy it down here for each partner. Right, so you will get the adjusted income. Okay. Right, so we are going to minus the capital allowance here. You have already calculated up here, so you just put here, under here, here, and here. Oh, I'm sorry. Okay, yeah, I do some mistake here. Okay, you just put it here and here. So the amount would be 6,000. 4,000 and 2,000. So this is the last answer. So after you do all the calculation, so you will get this answer. Okay, statutory income for persona is 19,582 ringgit. Meanwhile, for Almera, 20,167 ringgit. And Izora is 6,250 ringgit. So we already answer what question required you to answer, which is calculate the statutory income for each partner for year 2019. Okay, student. So for the working calculation sheets, it really depends on your lecturer on how they want you to calculate. Okay. Calculate as long as as long as the answer of statutory income for each partner is the same. So on however you are going to calculate your working sheet, it depends. Okay, it depends to your lecturer. Alright. Okay, so this is how the calculation look like for changes in the partnership. Okay, so for you to make sure that you get more understanding and you can conquer this calculation part, you should do more exercises, and we do hope that this example will help you to start on how to calculate the statutory income for each partner if there are some changes. Okay, so let's move to the next slide. Alright, so we already are at the end of part 3. At this moment, we already complete to have a look at the format aspect and computation under a changes in partnership situation. So at this moment, you should know number 1 on how to calculate provisional adjusted income PAI under a changes in partnership situation, and you should know also on how to calculate divisible income. And number 3, you should know how to calculate statutory income for each partner. And number 4, you should know how to allocate capital allowance or donation for each partner. So remember, when there are changes in partnership, you should find out an event, the date and the proper and the PSR that allocate for each partner. Okay, remember the period of month and the new PSR agreement. Okay, so after this, you are going to learn in the part 4, which is regarding about what is the type of form that related to the partnership. Okay, so see you soon.